You know, it's been a really interesting week for most people with the threat of coronavirus hanging over our heads. The stock market has taken several massive hits as people cash in their investments. So we asked, where is the best place for your money at the moment?
A savings account at the bank rather than in stocks and shares.
In property.
The bank.
The good old bank.
My super account, and that's where I'm leaving it.
You should have a diverse portfolio. It's the long run you're looking at, not the short run, and not panic.
One is in real estate and the other is in cash for flexibility.
If you can put it into your super. But then again, you get the stock market going down and the super goes down.
If you just keep it where it is, it's going to go down and then it's going to come back up.
I don't think I know where the safest place to keep my money would be, actually.
Well, a man who is suitably qualified to answer questions around finance is strategist at InvestSmart, Evan Lucas. Evan, the money markets have had some big hits this week, people pulling their money a little bit closer. Property seems to be continuing on a fairly strong path. Can that continue?
Okay, so let's clarify that first. The thing about Australians and why we love property is because it's tangible. You can touch it, you can change it, you can actually do and malleable with it. So it is why since 2006, it's almost up 100% if you look at property markets. So we get it, we understand it. However, when you also look at property, it's a very interesting market. It's technically only open once a week, being today, being Saturday. And with that in mind, there's another part of it, it's confidence, because you are buying a very, very big product. That's what it is, it's a product. And your story before with $655,000 is still a lot for every person out there. The average price in Melbourne is $1 million, same in Sydney. So why I say confidence is a problem is that with the coronavirus and where this is all now coming from, the threat for the economic side and what I do is your employment and your job. If you start to feel pressure on your job, the ability for you to go out and therefore buy a home just gets that little bit harder. So what we are starting to see is that demand may, over the next 3 or 4 months, start to come under pressure as people start to worry about what does Corona mean for me, and therefore what does it mean for my bigger investment.
So this is a matter of people seeing all the headlines, doom and gloom, recession, and then they're getting less confident and they're thinking, yes, I don't want to spend any money, let alone buy a house.
And that's the other thing is you've got to also put into perspective around the word R, the R word that we hate saying very often, but recession, most people in this country haven't experienced one. Let's also put that out. I mean, it's been since 1992 since this country saw a recession. And it is different to what everything else, and there is that little bit of pressure that is, even with record low interest rates, the recession does mean things slow down. Your choice to go out and consume not just a house, but also just a TV or something like that is just a little bit less. And therefore, do I need to do this today? It's just a little bit back further. It's not a panic. And that's the other thing I think you need to say to all this. It's not a panic. Corona will finish. It will end, whether it's next week, next month, end of the year, whatever it will finish. It's just that it's going to create a little bit of a different scenario that we haven't experienced for a very long time.
You mentioned really low rates in there, which is something that didn't exist back in the last recession.
Correct. Yeah, and they're going to get lower. I think that also needs to be put out there. And the reason I say that is the RBA has already basically come forward and said that it's still willing to support the market. I know that you're going to have people like me sitting on this desk talking to you about what could happen after, probably what will be another rate cut, whether it happens in April, so in about 2 weeks' time, or whether it happens in May. According to the market, it will happen in April. It's almost 100%. So that would mean they are reaching what they refer to as their terminal rate. So that's where the cash rate will be 0.25 of 1%. And to give you a highlight on that, over in the UK, they've gone to that level. The European Union has got lower than that. The Bank of Canada has got a rate that's now at 0.5. They've all been slashing rates. So your home loan will probably get cheaper again, inverted commas. It's what happens after that. And let's leave that for another day, but it's certainly going to be the next thing as well for support.
It is quite scary. I mean, all of these conversations seem quite lofty and scary at the same time, but still, people are always asking, is there an opportunity in all of this? Should I go out and buy, when people are fearful?
You just asked the question that we all hate, which is ill advice. The opportunity is the next question. So again, let's look at it from the point of view that, okay, if we do see a slight slowdown over the next 3 or 4 months, using the GFC as an example, so the GFC property was about 4 months behind what happened in the equity markets and in the bond market. So if you look at that, June-ish would probably be quite an interesting period of time. It's also quite a slow time in the property anyway. It's winter, property supply is lower. So price could be quite interesting. So the opportunity is there. And yes, by all means, you could probably see some pricing that actually helps you in that period of time. And there is always opportunity. Again, it's a question, and again, I'm trying to not use that word too much, which is risk. It's understanding, can you take on that additional risk with that opportunity?
And things were going so well. You know, we've sat here now for almost a month saying that the property market is doing really well and it's strong. We obviously saw great auction figures today, and that's because those properties have been on the market now for 6 to 8 weeks, and they're going to auction.
Or not even, they're getting done before auction. And that's the other thing. So you should know it's the strength of the market. We know that. Like, having to see clearance rates at the way they are in Melbourne and Sydney, over 75%, but also seeing pre-auction sales, which clearly means people are going in with basically big offers to stop the auction in. So it is hot, don't get us wrong. And 2017 was the last peak. We are technically above that now. So it is a hot market. That's the other thing that needs to be highlighted, is it's quite hot. And I'd probably argue that the equity market was a bit similar before. I mean, Corona is a different scenario, but it was hot. We had a record all-time high in the US and here in Australia on the 20th of February, 3 weeks ago. And we've seen the equity markets fall 23%. I don't expect the housing market to do the same thing. It's not the kind of thing that it does. But to see a 5 or even as much as a 10% pullback is not unsurprising. We saw that through end of 2017 through to basically midway through last year.
So it's just confidence in your own position at this point and how you feel in moving forward.
Yeah, and that's the answer to all of this. And there's nothing. It's not hard data. It's just quality. And the way to finish that up, Westpac this week released their consumer confidence numbers, and they were a wake-up call. So our belief in our family finances fell 8.5% in the last month. The belief in the housing price fell 7% in the last month. And so it's a leading indicator. It tends to mean that we are worried about, and what happens the next 12 months, that fell 14.2%. So that's why I say the word confidence. The figures are there from the surveys that actually matter.
You've kept a very calm lid on it this morning.
trying,
I know this is a really exciting time for you fellas, isn't it? In finance, numbers, there's all sorts of changes going on.
We love it.
We do
love it. We sort of get a little bit nerdy on it, but that's okay.
Yeah, it's awesome. Thank you for bringing the nerd aspect to it. I think there's a lot for us to dissect there.
Yes, there is.
But awesome information. Thank you very, very much.
Thanks,
Great
guys.
to have you with us.